Okay, dear students, this is Mustafa Mirchawala from Mirchawala Hub of Accountancy, and the objective of today's class is basically motivation. The first objective is motivation because I know you all have studied a lot, and now today's class objective is to do the very latest past paper, that is December 2021 attempt. December 2021 attempt. I've already solved the last papers in that June 21 attempt. It's already available on my YouTube as well as in my LMS. Okay, so do watch this as well. And in the exam, your examiner, the ACCA body, they only disclose last 40 marks past paper. They don't disclose first 60 marks. They don't disclose first 60 marks. They only disclose last 40 marks. Okay, right? So we are going to discuss that last 40 marks. One more thing I would like to highlight, and that is, recently I attended a conference, and in that conference, the ACCA body emphasized one thing globally, that the reason of failure of applied skills students, I'm talking about all applied skills paper, like F5 to F9, FM, PM to FM. Okay, I'm talking about all. The reason of failure is last 40 marks, not first 60 marks. Majority students fail because of last 40 marks. Okay, so you guys need to practice more for last 40 marks. That's why I am also doing the last 40 marks today. Now, one more thing, I have also made a WhatsApp group for you guys, and the admin has shared the link of that WhatsApp group in the chat box. So please join that WhatsApp group. It will be beneficial for you. It will be beneficial for you. I will share more resources in that WhatsApp group, more techniques and a lot of things. Okay, now let's start. Let's don't waste the time, and let's start with the latest past paper. And in the last 40 marks, of your TX paper, you get, listen, in the last 40 marks, you get 3 questions. One is for 10 marks and 2 questions for 15 marks each. Okay, so we are starting with corporation tax. The 15 marks part. Okay, let me discuss the question first. Be very active, and you guys have done everything by now. Now you all must have completed the course, because those students who are studying from me, I normally give deadline of 15th of Feb to complete the course, or 10th Feb or 15th Feb. Okay, because after that you have to read examiner report, you have to solve mock, you have to do revision and all these things. Okay, now Fogo Limited, first of all, this is the company question, corporation tax question. Fogo Limited has 100% subsidiary, Nita Limited. Okay, so that means this is Fogo and this is 100% Nita. Now we can see that they have, the 75% group has been made, capital gains group has been made. Okay, plus the associate, the 51% group limit proration also is there. Okay, because the holding is greater than 50%, the holding is greater than 75% as well. So between Fogo and Nita, there is a 75% group as well as a capital gains group. Okay, but we need to see which group examiner may ask. Now, first of all, let's discuss Fogo Limited. During the year ended 30th September 2020, this is your year end. Keep this in your mind. Year ended, year means 12 months. 30th September 2020. As it is ending on 30th September, so it's starting on 1st October. So your accounting period for this question is 1st October 2019 to 30th September 2020. 1st October 2019 to 30th September 2020. This is your accounting period. Fogo Limited made the following capital disposal. Now, this all paragraph is related to CGT companies. Okay, you all know this thing, that companies don't get any annual exemption. Companies don't get any annual exemption. Annual exemption is only given to individuals. But yes, company gets indexation allowance. Company gets indexation allowance, but indexation allowance is also given only when the company has bought asset before 31st December 2017. Okay, so and we get indexation allowance till 31st December 2017. No more indexation allowance after that date. No more indexation allowance after that date. No more indexation allowance after that date. Okay, now on 31st October 2019, Fogo Limited sold an investment property. It's not a business asset. Investment property, which had been let out to tenancy. All the duration it has been let out. That means you didn't use in your factory. You didn't use this property in your production factory or these things. It was let out on rent. So it's a sort of non-business asset. Letting is a non-business thing. Don't forget. Now, since it was acquired, the investment property was sold to an unconnected company, okay, independent company, to 625,000. It had cost 500,000 in February 10. Open your eyes, think over it. That means we bought on February 10. We bought this property. Company bought this property in February 10, and company sold this property in 19. Yes, that means bought before 31st December 2017. Use your brain, think over it. Bought before 31st December 2017 and sold after 31st December 2017. So you will be getting indexation allowance till 31st December 2017. Wait, let me show you with the sketch, because you guys are used to with the sketches thing. See this. You bought the asset on February 10 and you sold in October 19. Okay, so you will be getting indexation allowance from this date, indexation allowance from this date to this date. February 10, look at the screen, February 10 to 31st December 17. February 10 to 31st December 17, right? Do you have index factor? Yes, it's ready-made given. Look at here. Please, students, look at here. Yes, this is given. Can you see? February 10 to December 17, ready-made index factor is given. So now how you'll do? Come on, do it yourself. Now you guys are no more kids. You have paper after 15-20 days. Okay, so be active. What's your DP? DP is 625. Write it. I will do it also with you. Come on, write it on the paper. Disposal proceed is 625,000. Okay, less original cost is 500,000. Disposal proceed is 625,000, less original cost is 500,000. Original cost is 500,000. So this will be unindexed gain. First of all, you will get unindexed gain, and from unindexed gain, you will be deducting indexation allowance. What is the formula for indexation allowance? Cost multiplied by index factor. So you will get indexation allowance. But yes, don't forget, if the answer is coming negative, after deducting indexation allowance, the answer is coming negative, you will make it zero. Because there is a famous saying. I even taught you in the regular classes. Famous saying: indexation allowance cannot create or increase loss. Indexation allowance cannot create or increase loss. Indexation allowance cannot create or increase loss. Okay, now, so most probably the answer will be zero. Some students have calculated it, but don't worry. I'll teach you. I'll do it with you. Then on 4th May, now one more thing. This investment property is a non-business asset. Okay, it's a non-business asset. Okay, it's not a qualifying asset. It's not a qualifying asset. It's a non-business asset. Don't forget something to do afterwards. Now, on 4th May 2020, Fogo Limited sold a factory, sold a freehold warehouse. Yes, warehouse is a business asset. Warehouse is a qualifying business asset, something we have to do afterwards. On 4th May, which had used exclusively, see, exclusively in its trade. The warehouse was sold to an unconnected company for 560,000. Okay. And this is the cost, 100,000. Cost is 100,000 and it is bought in September 2001. Again, go slow. You bought means company bought the asset. Company bought the asset on September 2001 means before 2017, and company sold it in May 2020. That means after December 2017. That means bought before 2017 and sold after 2017. So yes, this company will be eligible. This company will be eligible for indexation allowance till December 17. Sir, where is the index factor? This is the C. This is the index factor. This is the index factor 0.593. So my dear students, just write DP. Just write DPs. DP is how much? 560. DP is how much? 560. Cost is 100,000. Cost is how much? 100,000. So you will do DP, proceeds less cost. In the first step, you will get unindexed gain. In the first step, you will get unindexed gain. In the first step, you will get unindexed gain. Okay. And then you will calculate indexation allowance. What is indexation allowance? Indexation allowance is cost multiplied by index factor. Cost multiplied by index factor. Cost multiplied by index factor. You will get indexation allowance, and finally you will get chargeable gain, final gain. Finally, you will get final gain. Some of these students have calculated. Yes, it's 400,700. 400,700. Some students have already calculated it. 400,700. 400,700. Okay. Now, so now don't forget, this was a business asset. This was a business asset. Okay, be careful. And can you tell me what is the proceed? How much cash proceed we get? 560. 560 is the actual cash we receive. 560 is the actual cash we receive. Hope you remember the rollover. You remember we used to sell one old asset and we used to buy another asset. We used to sell one asset and we used to buy another. So the rollover relief or frozen gain relief may be applicable here in this question, because in the starting I used a word capital gains group. In the starting I used a word capital gains group. I used a word capital gains group. I used the word capital gains group. Okay. Now, next, on 19 September 2020, the third, Fogo Limited sold 4% shareholding. Shares are not business assets. Okay. So to an unconnected trading company, resulting in a capital loss of 25,000. Ready-made, they are giving you capital loss, and whenever the loss is given, no more an indexation allowance is available. So now, till now, same company Fogo Limited did 3 transactions. Same company Fogo Limited did 3 transactions in one year. First 2 were gains. Definitely in the first part it's zero, but definitely initially the gain was there. First 2 was gains and the last was loss. Capital loss. Hope you remember the rules of capital loss. For companies. Capital loss can set off only capital gains. Capital loss can set off only capital gains. Okay. So this 25,000 loss will set off. This 25,000 loss may set off the gain, may set off the capital gain. Okay, right? And the remaining net gain, you need to pay tax. On the remaining net gain, you need to pay tax through companies. Okay, we are not studying individuals. In the individuals, there were RPG, NG, and all, residential property gain, normal gain, and like this. In the companies, there is no such thing. In the companies, capital gains. There is no such thing. Okay, so we just have read the first paragraph. Just giving you 30 seconds to read it and think over it. Now, next, this is Nita Limited. This is Nita Limited. What is the 100% owned subsidiary of our company? Okay. Now, for the year ended 30th September 2020, Nita Limited had a draft tax adjusted trading profit of 180. That means you have to do something with this trading profit. This figure has been calculated correctly, but does not include interest payable or receivable. Okay, interest payable or receivable. Listen. On 1st October 09. Now wait, you know the rules of companies. If we have taken loan for trading purpose, then the loan is an allowed expense. From trading profit. Okay, but if you have taken loan for non-trading purpose, then this will be allowed from loan relationship head. Loan relationship interest income head. There is a separate head in companies. Okay, so you know the rules. Come on, read it. On 1st October 09, Nita Limited borrowed 1 million, total 1 million, 10 lakhs from a bank at an annual rate of 5%. During the year ended 30th September 2020, the interest payable of 50,000. Obviously, 1 million multiplied by 5%. 1 million times 5% is 50,000. 1 million times 5% is 50,000. 1 million times 5% is 50,000. Okay, so was in respect of the following: interest on 550,000 of the loan to acquire a fixed plant and machinery for use in its factory. Yes, this loan we have taken to buy the factory. So this loan will be used for the purpose of trade. So yes, this 550,000, wait, this 550,000 times 5%. This 550,000 times 5%. What is the interest? Can anybody tell me? 550,000 times 5%. 550,000 times 5%. Yes, 27,500. This 27,500 will be deducted from trading income. This 27,500 interest expense will be deducted from trading profits. Now, next, interest on 450,000 of the loan to acquire a 3% holding in a trading company. No. Now you are doing investment. Now you have taken loan and you are doing investment. Hope you remember my first lecture of corporation tax. You are taking loan and you are investing in stock market. So this is not your business. This is not your primary trading activity. Okay, so this loan interest, the second one, this loan interest expense will be deducted from loan relationship packet. Okay, and how much will this be? This is 450,000 times, what is the interest rate? 5%. 450,000 times 5% is 22,500. Okay, so this interest expense will go in loan relationship. So just for your confirmation, please listen. 27,500 plus 22,500. 27,500 plus 22,500 make 50. 27,500 plus 22,500 make 50. So we just broke it up. Into two pieces. Okay. Now, one very interesting thing. May you know this. Listen this point. Between Nita Limited and Fogo Limited, Fogo and Nita, the holding is 100%. Between Fogo and Nita, the holding is how much? 100%. So there is a capital gains group between these two. Right? And in capital gains group, there are three types of relief available. In capital gains group, there are three types of relief available. Number one, physical transfer of asset. They can physically transfer asset to each other. Yes. And that transaction will be treated as no gain, no loss transaction. Number two, notional transfer of gains and losses. Remember? And the third relief was rollover relief. Third relief was rollover relief. And what is rollover relief? You guys know better. In rollover relief, now one company will sell the asset and the another company will buy. That means reinvest. Within the group, one company will sell the asset to a third party and the other entity will reinvest that proceed. Other entity within the group will reinvest that proceed. Okay. But yes, you strictly know the conditions. You strictly know the conditions of rollover, that both assets must be business assets. Both assets must be qualifying business assets. So yes, there is a possibility. Wait. Don't sleep. See this warehouse. See this warehouse. Can you see this warehouse? This warehouse is a business asset. Yes. And we sold it for 560. So we received the proceed of 560 from this business warehouse. And what is the date? The date is 4th May 2020. The date is 4th May 2020. We received the proceed of 560,000 from this business asset. Fogo. Now in return, look at here. In return, the Nita Limited bought 550,000 fixed plant and machinery. Yes, plant and machinery is also a business asset. Plant and machinery is a business asset. So yes, one member of the group sold the asset, qualifying business asset, another bought the asset. One member sold the asset, another member bought the asset. So there is a possibility of rollover, very easy. Now student may ask, sir, I hope you remember, even you taught us the time limit, that the reinvestment must be done 1 year before or 3 years after, 1 year before or 3 years after, 1 year before or 3 years after from the disposal date of old asset. Wait, what is the disposal date of old asset? Can anybody tell me? What is the disposal date of old asset? It was May 2020. It was May 2020. May 2020. Open your eyes. Can you see? Now, what is the buying date of new asset? 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 It's 1st October 0919. Yes, 12 months back or 3 years forward. 12 months back or 3 years forward. Yes, within last 12 months we have bought. Within last 12 months we have bought. Within last 12 months we have bought. So yes, we qualified for this. Yes, we qualified for this. We qualified for this. Now, one last question. You remember? Hope you all remember. Cash in hand. If there is a cash in hand, that the tax department will be angry. So yes, how much we sold the old asset for? See this yellow highlighter. We sold the old asset for 560. We sold the old asset for 560,000. We sold the old asset for 560,000. And we bought the new asset for 550. So yes, there is a 10,000 cash in hand. Yes, please don't sleep. You all have to give paper now. You have to appear in paper after 20 days. So there is a cash in hand of 10,000. Now what are the rules? The amount of cash in hand, gain related to amount of cash in hand cannot be rolled over. Okay. So out of the total gain of the previous asset, out of the total gain of the warehouse, is I think 40070. Total gain of the warehouse was 40070. Even you guys told me total gain of the warehouse was 40070. 10,000 gain will be immediately chargeable. 10,000 gain will be immediately chargeable, and remaining gain will be deferred. Okay. Now one more thing. You remember there was two things. One is rollover and one is frozen gain. One is rollover and one is frozen gain. One is rollover and one is frozen gain. Can you open your eyes and see what was the replacement asset? What was the replacement asset this time we bought? What was the name of replacement asset? Is fixed plant and machinery. The replacement asset is fixed plant and machinery. And whenever you buy fixed plant and machinery, this fixed plant and machinery is a depreciating asset. So I'm sure you know the lecture of rollover. If the replacement asset is a depreciating asset, then you don't need to do rollover. You have to do frozen gains. You have to freeze the gain. Okay. And you have to, let me use the correct word. You have to underground that gain. And now this gain will come back in this world in future. Now this gain will be taxable in future on the earliest of 3 dates. Three dates. Number one, the disposal date of new asset, the disposal date of replacement asset. Number two, the date we seize the business use, of that replacement asset. And number three, maximum 10 years. Okay. So these all things you must know. This paper is all about memory. How sharp you think, how speedily you think, right? So I hope you understood it. I hope you understood these points. If you understood these few points, these were basic things, then kindly hit the chat box. Okay. Thank you. Now, now the last thing is interest receivable. To be very honest, company always receive interest. It's a non-trading income. Interest is never a trading income for company, except if we are bank. For bank, interest income is trading income. For bank, interest income is trading income because that's their primary activity. But other than bank, all organizations, they treat interest income as non-trading income. Okay. So interest income, my dear student, will go in the loan relationship box. Okay, read it. Very easy. Neta Limited financial statement for the year ended 30th September 2020 showed interest receivable from investments of 35,000, of which 25,000 was actually received and 10,000 was accrued, closing accrued. See, this is closing accrued on 30th September 2020. There was no accrual brought forward on 1st October 19. My dear student, for companies, I'm talking about companies. For companies, interest income is taxed on accrual basis. For companies, interest income is taxed on accrual basis. For companies, interest income is taxed on accrual basis. Interest income is taxed on accrual basis. Companies' interest income is taxed on accrual basis. Okay, got it? An accrual basis. And when I teach this in class, I teach with T account. So you can do with T account as well. Listen, you can do it with T account as well, like this. See. Okay, how much cash we receive? We receive cash of 25,000. And what is there is no opening receivable? No. Yes, but there is a closing accrued income of 10,000. So if you add these two, your actual income will be 35,000. Your interest income will be 35,000. I taught in this way in the class, but yes, there are some students, they do it with the formula. And what is the formula? This is the formula. C. Closing accrued plus cash, less opening accrued. Closing accrued plus cash less opening accrued. This will give you 35,000. This will give you 35,000. This will give you 35,000. Okay. So now let's read the requirement and let's solve it. What is the requirement? First requirement, 5 marks. Open your eyes. Calculate the net chargeable gains for FOGO, only FOGO, only FOGO. The first paragraph. Net chargeable gains means three gains, 3 transactions: investment property, warehouse, and then shares. Before any claim for the group relief for the year ended 30th September 2020. Okay. In the first requirement, don't even discuss the group relief. Don't even discuss the group relief. Don't even discuss the group relief. In the first transaction, no need to discuss the group relief. Okay. Now, in respect of the disposal by FOGO Limited, freehold warehouse on 4th May 2020. See, now they are openly giving you hint that just discuss the warehouse, because they know that warehouse is the business asset. Warehouse is the business asset, and you can only claim rollover relief if the both assets were business asset. If the asset sold and the asset bought, if the asset sold and the asset bought are, if the asset sold and asset bought are business assets. So they know this thing, and that's why they are giving you hint in the requirement. In respect of the disposal by FOGO Limited, its freehold warehouse on 4th May 2020, give 2 reasons why FOGO Limited can make a group relief claim. First of all, you have to write in theory about the two reasons, because they have they have met the condition, and explain which of the NETA's limited asset acquisition will qualify and which will not qualify as a replacement asset. Listen, NETA Limited bought 2 things. Number 1 is shareholding, and number 2 is fixed plant and machinery. NETA Limited bought 2 assets. NETA Limited bought 2 assets. Number 1 is fixed plant and machinery, and number 2 is shareholdings. Can you tell me which asset will qualify? Which asset will qualify for rollover? Which asset will qualify for rollover? Only plant and machinery. Only plant and machinery, because you all have studied the condition of rollover. The assets, the old asset sold and the new asset bought. The old asset sold and the new asset bought must relate to few classes. Must relate to few classes: land and building, plant and machinery. Remember, there is no word of shares. There is no word of shares in rollover relief. I'm sure you all know this by this time. You all know this thing by this time. Okay. So only plant and machinery will qualify. Only plant and machinery will qualify. Okay. Now the last requirement: calculate the amount of gain which will be deferred, if a claim of group relief is made, and explain when the deferred gain will become chargeable. Hold. See, calculate the amount of gain which can be deferred. So you calculated this for me, that there was some cash in hand. There was some cash in hand of, I think, 10,000. So 40070 minus 10,000. 40070 minus 10,000 of the gain will be deferred. 40070 minus 10,000 of the gain will be deferred. The remaining 10,000 will be immediately chargeable. Okay. And then you have to discuss, this deferred gain will go in the freezer. This deferred gain will go in the freezer, or we'll underground this gain, and this gain will come out. This gain will come out in the world when on the earliest of 3 events. On the earliest of 3 events, because this is not pure rollover. This is frozen gain case. This is not pure rollover. This is frozen gain case. I'm sure you know this. And even I discussed this. Okay. So just giving you 30 seconds to read these 3 requirements. No need to rush. Just read these 3 requirements. Okay, now the last requirement: calculate the total taxable profits of NETA Limited for the year ended. Very easy. This. They are not asking you. They are not asking corporation tax. Just they are asking TTP. Just calculate total taxable profit. That's it. That's it. Just calculate total taxable profit. They are not asking you to multiply it by 19%. No. That's not the requirement. Now, your calculation should commence with the draft tax adjusted trading profit 180,000, clearly adjusting for the trading interest payable and showing total. See, this examiner is doing big favor with you. Examiner even telling you to write trading profit and then first deduct interest expense on loan taken for trading activities. Interest expense on loan taken for trading activities. Okay, then make the second head, then make the second head, then make the second head of loan relationship, then make the second head of loan relationship. Okay, so I'm sure you understood the question. Now I'm going to, for this question, I'm going to move to my Excel sheet. Okay, and then so I'm going to disconnect my iPad for time being. Okay, now let's wait 1 minute. Kindly close your cameras. All of you, please close the camera. All of you, please close your cameras. Thank you. Okay, can you see my screen? Can you see my screen or not? Can anybody, all of you can see my screen or not? Yes. Okay. Now don't worry, it's easy. Now listen. You, if you don't have the question, let me show you the question. Wait, this is the question. If you guys want to take the picture of this question, quick take a pic. If you want to take the pic of this question, then take it so that you can. Okay, now let me go to the Excel sheet. Okay, so first of all, I have given the heading FOGO Limited. Requirement number A. There is one big issue. This is the complaint. This is the complaint by examiner. Wait. Okay, now listen. This is the complaint by examiner that students lack referencing. They don't give proper reference which requirement you are solving. Properly write requirement number A, part 1. Give headings. These things matters. Okay. Now, what is the proceed of invest? The first thing is investment property. The proceeds of investment property was 625,000, right? 625,000. What is the cost? What is the cost of investment property? It was, I think, how much? 500,000. Okay, so it's 500,000. Now, first of all, let's calculate the unindexed gain. This is your this is your unindexed gain. Okay, now you need to calculate indexation allowance. Indexation allowance is what? Cost multiplied by index factor. You have the picture, you have the proper picture. Okay, so it's 500. Cost is 500,000 and the index factor was 0.269. Cost was 500,000. multiply by 0.269. Okay, let's do it here. Minus 500,000 shift 0.269. Okay, so this is 134,500. Now you tell me one thing. Your unindexed gain is lower, but indexation allowance is higher. So your final answer will be 0. Final answer will be 0. And you just need to add one line. Indexation allowance cannot create loss. That's it. Indexation allowance cannot create loss. So in the first working, the answer is 0. In the first working, the answer is 0. One thing, let me clarify you. As I want to save my time, that's why I have given the headings before. In the examination, you have to write everything from 0, but you can type, you know how to give headings. This is not my objective to teach you how to type, please. Okay, so there are some innocent students, they sometimes do message me. They ask that in the examination we'll get the ready-made format like in your class. So it's not the case. It's not the case. You have to type, please. So now next thing is warehouse. What is the proceeds of warehouse? What are the proceeds of warehouse? It's 560,000. It's 560,000. Then you have cost. Cost is 100,000. Okay. So first of all, your unindexed gain, this is your now indexation allowance will be, this is 100,000 into 0.593. 100,000 shift 0.593. 593. Okay, so let's do it here. 100,000 times point. Okay, so it's 559,300. So finally your we just need to highlight these two. So it's 400,700. 400,700. 400,700. Your chargeable gain is 400,700. Be confident. Be confident. It's not difficult. It's not difficult, please. Now, so for these two transactions, I have calculated. For these two transactions, I have calculated the gain. The first answer is 0, and the second answer is 400,700. Now let's go. Now let's go to the net gains. Net gains means now you have to apply capital loss relief in the current year. You all know this is. I'm just talking about the single company. I'm not talking about the group relief group or capital gains group. In a single company, where if you have a capital loss, so capital loss, current year capital loss can easily cancel current year capital gains. Current year capital loss can easily cancel current year capital gain. Okay, so in investment property, you have a 0. In investment property, your income is 0, your gain is 0. And the second gain was, let me copy this, 400,700. And yes, for the third, shares. In the question, you can see the shares. In shares, we have 25,000 loss. So this 25,000 loss will cancel the 400,700 gain. So let's net it off. Let's net it off. So you will have a net gain. You will have a net gain of 375,700. You just completed your 5 marks requirement. You just completed your 5 marks requirement. You just completed your 5 marks requirement. Okay, you just done with the 5 marks requirement. You got it? Please tell me. Quick tell me. Quick tell me. Time is very important, please, students. Okay, thank you, thank you, thank you. What was the requirement number B? In the requirement number B, you need to discuss. You need to discuss whether we can get group relief group, and on which asset that N limited bought 2 assets. So which asset will qualify for rollover relief? Okay, so I just told you during the discussion. Now let me show you how you have to discuss. See, Let me enlarge you. Listen. As Fogo Limited holding in Nita Limited is greater than 75%. Remember, the holding was 100%. 100% is greater than 75. That's why they both are part of capital gains group. This is first line. Simple line, no technical English. As Fogo Limited holding in Nita Limited is greater than 75, which is 100. 100 is greater than 75. So they both qualify for capital gains group. It's made. Okay. Now, the warehouse is a qualifying asset and was used exclusively for business purpose. Because the condition is the old asset sold and the new asset bought. The old asset sold and the new asset bought must be qualifying business asset. Okay. So yes, the old asset sold was qualifying business asset, the warehouse. Nita Limited asset purchased. Nita Limited purchased asset within 1 year before and 3 years after the disposal. Yes. And the one more condition is time limit, that you have to buy 1 year before or 3 years after. And yes, Nita Limited qualified this. Nita Limited qualified this. Why? Just think about the dates. Old asset was sold in May 20. Old asset was sold in May 20 and the new asset was bought in October 19. So in within last 12 months. Within last 12 months. Okay. Now, one more requirement. Nita Limited bought 2 assets. Number 1, plant and machinery, and number 2, shares. You tell me which will qualify. Which will qualify for this? Which will qualify for this? Only plant and machinery will qualify. See, also the new asset bought is a fixed plant and machinery, which is a qualifying asset, and it will be used in Nita Limited's trade. Okay, right? But shares are not business assets, so no group rollover relief for that. Okay, shares are not business asset for the purpose of rollover relief. Only plant and machinery. Only plant and machinery. Okay, only plant and machinery. Okay, now the next requirement. Did you understand this part? Did you understand this part? Smart students, tell me. We have discussed it already. We have discussed this already in the discussion. Okay, fine. Thank you. Now, next step. How much gain we can defer? Because there was some cash in hand. Okay, so as the complete not reinvested by what's the name? By that's why there is 10,000 of cash in hand and gain related to cash in hand cannot be deferred. So only wait. Kindly tell me 40070 less 40070 less 10,000. 40070 less 10,000. 400 sorry 700 less 10,000. 390,700. Only 390,700. Right in the bracket 400,700 minus gain can be deferred. Okay, only this amount of gain can be deferred. Only this amount of gain can be deferred. Only this amount of gain can be deferred. Please check, please check. Only this amount of gain can be deferred. And now one more requirement was attached. One more requirement was attached with this part. One more requirement was attached with this part. And you tell me, this deferred gain will be taxable in future. Obviously, the deferred gain will be taxable in future. So what is the date? On which date this deferred gain will be taxable? On which date this deferred gain will be taxable? As the replacement asset, as the replacement asset is a depreciating asset. See, as the replacement asset is a depreciating asset. So now we'll have to do frozen gains. We'll have the gain, the deferred gain will be frozen, and this gain will be chargeable on the earliest of these three events. On the earliest of these three events already discussed, on the earliest of these three events already discussed. Hope you remember. There is a difference between frozen gains and pure rollover. There is a difference between frozen gain and pure rollover. I hope you remember this thing. Okay. Now, the last requirement, the most easiest part, the last requirement is for Neta Limited, separate Neta Limited. Listen, just treat Neta Limited as a separate company now. Neta Limited is a separate company, and you have to do the pro forma. You have to do the pro forma of corporation tax. Listen my words. Let me recall you one excellent thing. Whenever you are asked to calculate the tax for individual, three columns comes in your mind: non-saving, interest, dividend. Remember, you used to study like this. Whenever you are asked to calculate tax for income tax for individual, so three columns will come in your mind: non-saving, interest, and dividend. But whenever you are asked to calculate the tax of companies, only one single format. For companies, there is one single format. Remember, let me recall you: trading income, property income, gains, trading income, property income, gains, and interest income. Okay, then you get total profit, and then you deduct QCD, so you will get taxable profit. Remember this. Now wait. In this question, for Neta Limited, there is no capital gains and there is no property income. There is no capital gains, my dear student, and there is no property income. But yes, they have trading profit and they have interest income. So just two things you have to calculate. Out of four things, the proper pro forma, out of four things, you just have to calculate two things. So listen, first of all, look at here, easy peasy. Your trading profit was 180,000. Draft trading profit was 180,000. Now, from trading profit, you have to deduct that loan interest, the loan which you have taken for trading purpose, and yes, the loan which you have taken for trading purpose, the loan which you have taken for trading purpose, the loan which you have taken for trading purpose, listen, that loan interest will be deducted from trading profit, and this will be 27,500. Hope you remember the 27,500 thing. Okay, so this amount will be how much? 152,500. Revised tax adjusted trading profit will be 152,500. Okay, now the next head is loan relationship. I'm sure you remember this. The loan relationship. In this, you will have to book non-trading interest income and non-trading interest expense. So you will have non-trading income of how much? 35,000. Remember, I made the T account for you. That cash received plus closing accrued. Cash interest received plus closing accrued. If you want to write, you can write here. See, this was 25,000 plus 10,000, right? 25 plus 10, this makes 35. Okay, and interest payable was 22,500. Remember the question? Interest payable was 22,500. So my dear students, you will have this amount 1 to 500. 1 to 500 is your 1 to 500 is your loan relationship box, is your loan relationship box. Now finally you need to calculate taxable total profits. Taxable total profit. As a student you may ask, sir, first we calculate total profit and then we deduct QCD. First we calculate total profits and then we deduct QCD. Okay, I got it. But there is no QCD, dear student. There is no QCD in this question. So you can directly calculate taxable total profits by adding these two, by adding these two. This one plus this one. Okay, so this is your final answer. This is going to be your final answer. And that's the end of this 15 marks question. That's the end of this 15-mark question. Now, as a student, you may ask, sir, do you think in examination we'll have to invest 1 hour for this? Because we started class on almost at 2 p.m. and now it's almost 1 hour. Right now, I'm teaching, I'm repeating things, I'm explaining also. In examination, you don't have to do like this. In examination, you don't have to do like this. So in examination, you can go fast, you can go fast. Okay, right? If you understood this topic, please tell me on the chat box. Let me connect my iPad now. Let me connect my iPad. Don't worry, I'll share this Excel file with you. Excel file will be shared with you. Okay. So now we are again on the iPad view. We have done 115-mark question. Please stay motivated. You have to clear. Think about that day. You have to clear this paper. No need to give this paper 2 times. There are papers which should be given 2 times. That is professional level paper. This is skills level paper. You can clear in first attempt. If you are active, if you have a proper study plan, you can do it. Okay. Now we have done 115-mark question. This is second 15-mark question. I'm sure the screen is clear. You can see the screen. Just read it. Just walk through it. I'm giving you 30 seconds or 1 minute to walk through it. Now, this is again a 15-mark question. 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 Okay. Now, Amanda's taxable income for the tax year 2021 is as follows. You have employment income, you have property income, you have employment income, you have property income. I'm sure you know these two are non-saving. NS, employment income is also non-saving, and property income is also non-saving. Now, this is your total income. Then you can do deduction for loss relief, and interest payments. Interest payments is qualifying interest. Qualifying interest is also deducted from total income. Okay, so this 57,000, this is your basically net income. I hope you remember the formats. This is your net income. This 57,000 is your net income. Okay, and then you take to net income to the side. Then you take net income to a side, and then you calculate ANI, adjusted net income. Although they have not shown the working, but I'm sure when net income is 57,000, when net income is 57,000, so ANI will also be around 50 or something like that. So in that case, your personal allowance will be 12,500. So this is your taxable income 44,500. This is your taxable income 44,500. Be active. This is your taxable income 44,500. Now we will think practically now. Just get ready to lose some marks in the exam. In the question of 15 marks, 8 to 9 marks are very easy, like they are routine, 10 marks. But 4 to 5 marks are related to planning, and that 4 to 5 marks everybody can't do. So get ready to lose some marks. You have to cross the 50 marks border. Be practical. Don't think that we have to understand and we have to do each and everything. No, you have to clear paper. That's it. You have to clear the paper. That's your objective. No need to take things on heart for just 2-3 marks. This should be your approach. For the period 1st November 2020, now you know your fiscal year. All of you know your fiscal year. Yes. First, listen to me. Employment income is always calculated for fiscal year. Employment income is always calculated for fiscal year. These are the basics. And your fiscal year is 2021. Your fiscal year is 2021. So it starts on 6th April 20. It starts on 6th April 20 and ends on 5th April 21. It starts on 6th April 20 and ends on 5th April 21. Okay. But for the period 1st November 2020 to 5th April 2020, Amanda's employer provided her with living accommodation. Very important point. If you miss this point, you will lose 1 mark. See, only November, December, January, Feb, March, only for 5 months. See, only for 5 months. 5 months. Your employer provided you this accommodation only for 5 months. And yes, hope you remember, in employment income, there is one very important thing. In employment income, there is one very important thing, and that is listen, time apportionment. So you need to time apportion the annual value. You need to time apportion the additional benefit, each and everything. Sorry. Each and every benefit for this accommodation, you need to time apportion. Don't forget these cash marks. Now, her employer had purchased the property on 10th February 2018. Yes, when bought by employer. This date is important. When bought by employer, and this for 174,000. This is the cost, and it was valued. This is market value. This is market value on 6th April 20, and at 194,000 on 1st November 20. Now wait. Just highlight the 2 days. Just highlight the two dates. Just highlight the two dates. Number one, when bought by employer is 2018. When bought by employer is 2018. And when first provided to employee is 1st November 2020. So how much is the gap? The gap is only 2 years. The gap is only 2 years, which is less than 6. The gap is only 2 years, my dear student, which is less than 6. So in this situation, you will be using original cost plus all improvement before 6th April 2020. Original cost plus all improvement before 6th April 2020. I'm sure you remember it. Please. Now it's late. It's late now. You must know these things. Okay. So now original cost is relevant. See, this original cost is for sure relevant. And now improvement costing 8,000 were made to property in May 19. Yes, May 19 means before 6th April 2020. May 19 means before 6th April 2020. So yes, we'll include this improvement as well. So 174 plus 8, 174 plus 8, 174 plus 8, 174 plus 8, less 75,000 and times 2.25%. Remember, times 2.25%, times 2.25%. Okay. Now the annual value, yes, this is also relevant. The annual value of the property is 6,300. So normally these are the taxable benefits of accommodation. Accommodation benefit, annual value, yes. Additional benefit, yes. And there was one more thing which is called ancillary benefits, like gas bill and all, But there is a chance that they don't provide any ancillary benefit. Now, the property was furnished. Now very big dodge. Wait, this line is a dodge. The property was furnished. Furnished means entering furniture, giving furniture like sofa and all. Furnished by Amanda employer during August 2020 at a cost of 12,400. That means now employer is giving you furniture for use. So is furniture a car? No. So there is a topic, assets other than car for private use. Assets other than car for private use. Now listen the dodge. We should clap for the examiner. Examiner is so active, so smart is the examiner. No doubt employer put this furniture in the house on August 2020. But from which date Amanda started using it? 1st November. That means Amanda is getting benefit from 1st November and we are calculating benefits. So we have to calculate only 5 months benefit, 1st November to 5th April 2021. Not getting. No doubt employer bought it in August 2020. But tell me from which date employee is getting benefit, because we are doing calculation for employee benefits. And employee started taking benefit on 1st November 2020. Okay. So these were the comments of examiner that some people calculated for 7 to 8 months, and that's wrong. So all benefits in this paragraph, will be calculated. All benefits in this paragraph will be calculated for 5 months. Okay. So annual value, yes. Additional benefit, yes. And usage benefit, yes. All these three will be calculated, and in the end you need to do 5/12. Now the good news, the taxable benefit in respect of the living accommodation is included in the employment income. Yes, in the employment income above they have already included it. That's good. But yes, they will check your knowledge. Okay, I'm giving you 1 minute, all of you. Just 1 minute is enough, or 2 minutes. Okay, just calculate the benefits in this paragraph for me, and also do 5/12. Just calculate the benefit and also do 5/12 for me. This is the requirement. Do calculate the benefits and do 5/12 for me. Okay, let me solve it for you. 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 Come on. Now, if you want to take the screenshot of this question part, you may, so that you can, because I'm going to move the screen. Read the first requirement. 5 marks. Calculate Amanda's taxable benefit for the tax year 2021 in respect of living accommodation provided by her employer. By her employer. Okay. So let's do it. Let's do it. Let's do it. I'm doing it here, right? Okay. And I'll send you the Excel solution if you want, but it's not difficult. Simple typing. So annual value was how much? Annual value was how much? Annual value was, I think, 6,300 pounds. Annual value was 6,300 pounds. Annual value was 6,300 pounds. Okay, right? Then additional benefit. In additional benefit, we need to take cost. We need to take cost because the gap was less than 6 years. So the cost was cost was 174,000. Cost was 174,000, right? And there was some improvement of 8,000. Improvement was 8,000. So 174 plus 8. 174 plus 8 is how much? I think 182. Yes, 182,000 less the limit. Limit is 75,000. What is the extra amount? 182 minus 75 is how much? 182 minus 75. Can anybody tell me? Can anybody tell me? It's 107,000. Okay. And what is the percentage? 2.25%, right? How much is the amount? No need to apportion it. I'll do apportionment in the end. I'll do apportionment in the end. Don't worry. 2,408. Okay. Now, finally calculate. Yes, rounding off error. Finally calculate the furniture usage benefit. Finally calculate the furniture usage benefit. Furniture usage benefit. So I told you, no doubt the employer bought the furniture in August, but it is provided to employee on 1st November. So again, this benefit is also for 5 months. So furniture, for furniture, simply cost multiplied by 20%. So cost was 12,000 multiplied by 20%. How much is? It's, I think, 2,480. Let's total all of these. Let's total all these three. This will be 111,188. Okay. And finally, you need to do 5 upon 12. Finally, you need to do 5 by 12. 5 by 12. 111,188. 5 upon 12. This will be 111,188 into 5 upon 12. 4,661. Okay. So these 5 marks are not difficult. These 5 marks are not difficult. Yes, there was one dodge. There was one dodge of August furniture benefit. Otherwise, it was very simple. It was very simple. You do these things in class. You do these things in class. All of you understood this part? All of you understood this part? Yes, you can understand. Students, you guys are champion. Very basic question. Yes, you can. Yes, you can. You can multiply 5 upon 12 or in each and every step, or you can do it in the end. Both are acceptable. My dear student, you can time apportion in each and every step, like 6300 into 5/12, then 2408 into 5/12, then 2480 into, you can do it. And I'm doing it one time. It's basic maths. You will get the same answer. Same answer. You can do it. I have applied shortcut. It's your wish. And the answer will come same. Just a 0.12 difference. That's it. Okay. Now, let's move to the second area of this question. This is partnership loss. Partnership loss. I'm sure you remember, if you have studied the partnership lecture, sometime it happens. Sometime, yes, annual value. Annual value should also be, because the name is annual. Annual means 12 months. Annual means 12 months. So it's a 12 months benefit. So you just enjoyed 5 months. You just enjoyed 5 months. So you need to apportion it. Yes, yes, definitely we'll apportion. Now, next, this is partnership. Hope you remember when you have studied the lectures of partnership. Sometime it happens there that in between the year, the ratio of partnership is revised. The ratio of partnership revised. For example, in the mid of the year, the ratio of partnership is revised. So you do appropriation of first 6 months separate, and you do appropriation of last 6 months separate. You do appropriation of profits for first 6 months separate and last 6 months separate. Remember? Yes. Now, let's read it. Amanda has been in partnership. Now wait, partnership is always done for business. It's part of trading income. Don't think that people do job in partnership. No. Partnership is always for business, trade, business. Okay. So now it's a business income question. This area is business income. Don't. And in trading income period, accounting period is very important. In trading income period, accounting period is important. Okay. Amanda has been in partnership with Benny and Cotton since 1st January 08, 12, 13, 14 years back. For the year ended, yes, this is your relevant year. This is your relevant year. For the year ended 31st December 20, write somewhere that your accounting period is 1st January 20 to December 20. Your accounting period is 1st January 2020 to 31st December 2020. Write somewhere, please write. Now, the partnership made a tax adjusted trading loss of 10800. Okay, so for the complete year, 12 months loss is given. 12 months loss is given. The way you apportion the profits, the way you do appropriation of profits, the same way you follow for appropriation of loss. Yes. Until 28th February 2020, profits and losses were shared. Profits and losses were shared equally. See, in the first 2 months until 28th February 2020, that means January and Feb. Wait, student, again. Your accounting period in this question is 1st January 20 to 31st December 20. 1st January 20 to 31st December 20. Okay, open your eyes. Now, until 28th February 20, that means first 2 months of this accounting period, profit and losses are shared equally. Okay. So Benny and Cotton, and we are Amanda. The other 2 people are Benny and Cotton. So there are 3 people. And they are saying shared equally. That means 1/3, 1/3, 1/3, 1/3, 1/3, and 1/3. Whenever there are 3 peoples and things are sharing equally, that means 1/3, 1/3, and 1/3. I hope you know this basics. Now, since 1st March 2020, profits and losses have been shared. 15% to Amanda, 60% to Benny, and 25% to Cotton. That means first 2 months, in the first 2 months, the agreement is different. And in the last 10 months, the agreement is different. In the last 10 months, the agreement is different. Okay. Now, Amanda has claimed her share of profit partnership loss against her total income. Yes, please don't sleep. You have studied, you know this. Please show confidence. From partnership, we get trading things. Partnership is done for business trading. So if it is an income, then it is a trading income or trading profit. And if it is a loss, then it's a trading loss. So it's a chapter of trading loss. And if you remember in trading loss, you can cancel your current year total income. If you have a trading loss, you can cancel your current year total income. Remember your current year total income. That's why see, they have done this. See, they have done this. They have done this. See this. They have done this, and this is perfect. This is perfect. Your trading loss is all. You can set off your trading loss against your total income. You can set off your trading loss against your total income. See this. Amanda has claimed her share of the partnership's loss against the total income for the tax year 2021, and this is included, very good, in the deductions for loss relief and interest payment figure of 3,200. This is perfect. Now I'm giving you a 30-second task. No, 90-second task. 90-second. Next requirement. Read the next requirement. You have to do relevant things. Please don't do irrelevant thing. Irrelevant things won't give you marks. Irrelevant calculation won't give you a single penny. In this question, we have to solve only for Amanda. I can see, we can see, we all can see that there are three people: Amanda, Benny, and Cotton. Amanda, Benny, and Cotton. Amanda, Benny, and Cotton. But Benny and Cotton are irrelevant right now. Our question theme is Amanda. So now read the second requirement and do it for me. Read. Just 2 marks and 2 free marks. Let me write free. 2 free marks. Calculate Amanda's, only Amanda's partnership loss relief claim for tax year 2021. How much relief can she claim? Can she claim? Can she claim in this? Now, first 2 months different and last 10 months different. First 2 months different and last 10 months different. This is the question. This is the question. Use your brain. Very good, very good. Some people doing excellent. Excellent, excellent, excellent. You guys are champion in getting free marks. Let me show you. Okay, for the whole year, it was 10,800. Look at here. See, for the whole year, just this is my baby spoon feeding style, because you guys are babies. So first 2 months separate and last 10 months separate. Okay, first 2 months separate and last 10 months. The whole 12 months loss was 10,800. Kindly do 10,800 into 2 upon 12. 10,800 into 2 upon 12 is how much? 10,800 into 2 upon 12. Can anybody tell me? 10,800 into 2 upon 12. 1,800 will come here, and then 10,200 into 10 upon 12. 10,200 into 10 upon 12. 10,200 into 10 upon 12. It's 9,000. It's 9,000. Okay. So we just simply apportion the total loss. Now, in the first 2 months, what was the profit sharing ratio? Equal. What was the profit sharing ratio? It was equal profit sharing ratio. It was equal. Equal means equal between 3 means 1/3, 1/3, 1/3. So Amanda will get 1 upon 3. And in the last 10 months, Amanda profit share is 15%. In the last 10 months, Amanda's profit share is 15%, is 15%. Remember? Okay. Okay, yes or no? So how much was the, let's calculate it formally. 1st January 22, 28 Feb. See, it's 10,800 times 2 upon 12 It's 2 months loss. And what was your share? 1/3. What was your share? 1/3. So I think 600 will come to Amanda. Okay. And then 10,800 times 10 upon 12. See, this is last 10 months. This is last 10 months. This is last 10 months. And in the last 10 months, Amanda's share was 15%. Amanda's share was 15%. So how much is this? This is, I think, 1350. So your total loss will be 1950. You got 2 marks. You got 2 marks. Enjoy, enjoy. No need to fail on 48. No need to fail on 48. Add these 2 marks in 48. You will pass. This is a real past paper. This is a real past paper. Sometimes I say it needs lot of efforts to fail a paper. It needs lot of effort to fail a paper. You have to sit in bad gatherings. You have to watch lot of movies. Otherwise, I think clearing paper, you can pass at least. I'm not talking about 80s, 70s, not even 60s, 50. Those who have taken classes and those who are doing revision and those who have make exam folders, they can at least pass, at least. Next. Now, there is one more thing. Now they are saying gift aid donations. During the tax year 2021, Amanda made a charitable donation 640 net. What was the calculation? What was the easy calculation of gift aid donation? In gift aid donation, always there are 3 steps. First of all, you need to do grossing up. So what is the gross amount? 640 divided by 80 times 100. This will give you 800. Okay, this is your gross. Now with this gross amount, you do 2 things: ANI reduction and band extension. ANI reduction and band extension. ANI reduction and band extension. Just for you guys, I'm calculating ANI. Listen. Look at here. This is your net income. See, I'm doing here. This is your net income. This is your net income. Okay, how much is this? It's 57,000. I don't know what is happening with my iPad. Why these lines are coming? I don't know. Now, next thing, less gross GAD. Gross GAD is 800. So your ANI is 56,200. Your ANI is 56,200. Your ANI is 56,200. Sir, why you have calculated ANI? I'm sure you all remember your ANI is dependent, in the child benefit. In the child benefit area, ANI is used. 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 Now wait, quick recap of child benefit. Whenever you receive a child benefit, you don't write anywhere in any income statement, never, non-saving interest dividend, no column. You just have to decide one thing: whether to return this child benefit or not. Okay, so if your ANI is less than 50,000, if your ANI is 50,000 or less, then no need to return. Just eat it. If your ANI is greater than 60,000, then return complete. Then return 100% child benefit. But if your ANI, open your mind, if your ANI is between 50,000 and 60,000, if your ANI is between 50,000 and 60,000, then then you have to calculate a percentage, and then you have to return through percentage. Then you have to return through percentage. Now, wait, what's your ANI? What's your ANI? It's 56,200. ANI is 56,200. Is it greater than 50,000? Yes. How much? 6,200. Your ANI is 56,200. It's greater than 50,000. Yes. 6,200. Just remove these two zeros. Just remove these two zeros. It means 62%. It means 62%. You need to return 62% of the child benefit. You need to return 62% of the child benefit. Easy peasy. In the income tax chapter, all teachers teach this. Yes, 62% of the child benefit will be returned. Very good, very good, very good. Now, let's read. Pay as you earn. For each of the 12 months, Amanda's employer deducted 900. That means it's per month, okay? It's per month. From the Amanda's monthly earnings under pay, okay? You remember the objective of pay? Pay never comes anywhere. It comes in the end after income tax liability. Once you calculate income tax liability, ITL, then you deduct this pay with deduction at source to obtain income tax payable or income tax receivable. Income tax payable or income tax receivable. Okay, now no need to read about Amanda's husband right now. It's a separate requirement. Now read the requirement. C part, 5 marks, again good marks. Calculate the income tax and child benefit income tax charge payable or repayable to Amanda's. See, they have written and, that means two requirements. These are two requirements, two separate requirements. Income tax is separate and child benefit is separate. Income tax is separate and discuss child benefit separately, okay? For income tax, in the first part of the question, you have income. Tell me, income tax, how much is your taxable income? How much is your taxable income? Can anybody tell me? How much is your taxable income? How much is your taxable income? It's 44,500. And luckily, all taxable income is non-saving income. All taxable income is non-saving income. So not a difficult task, to compute tax. You guys are champion. To calculate tax with interest, dividend, and lot of things. This is just non-saving income. Yes, but don't forget, you need to stretch your bands. So your normal band was 37,500. And because of gross GAD, you need to stretch the band. You need to stretch the band. Okay, you need to stretch the band. Now, so let me do. It's 44,500, right? 44,500. Okay, let me do it. Don't worry. First of all, check the band capacity. 37,500 plus 800. Your first band will be 38,300. Yes. Okay. So your bands are 0 to 38,300. Okay. So now tell me, your taxable income was 44,500. Listen, first of all, you'll pick this, and this taxable income is pure non-saving. Pure non-saving. You will pick this non-saving income and you will knock the door. Of his first band. You will knock the door of this first band. So your income is higher and the band is lower. The capacity of band is lower. So you will consume complete first band. Okay, so let's see. NS, this will be 38,300. And what is the tax rate? For first band? 20%. So tell me 38,300 times 20%. 7,660. Now, 44,500 less 38,300. Come on. We have already calculated tax for 38,300. Can anybody tell me 44,500 minus 33,300 minus 38,300? How much is left? 6,200. Now this 6,200 times 40%. How much? How much? 2,480. Can you total it? Can you total it? Okay, 10140. This is your ITL. This is your ITL. No need to discuss child benefit now. Child benefit is a separate topic. Now we have to calculate pay. So now we'll deduct pay. How much was the pay per month? Pay per month was 900, and there were 900, and there were 12 months. So 900 times 12 is 10800. So see, in this question, there is no more income tax payable. It's receivable. It's receivable. Okay. And in the normal class, we teach student that sometimes we have to receive tax. So 660 is a negative number. And this is your income tax receivable. Okay. This is your income tax receivable. Okay, now one thing, A and I. Now child benefit. How much child benefit we receive? How much child benefit we receive? We receive child benefit of 2547. Simple. As Amanda's A and I is 56,200. So we need, sorry, to return 25, how much? 2537, right? 2547, sorry. Times 62%. 1579. This is your answer. That's it. This requirement also done. This requirement also done. One technical thing I would like to teach you. Normally when I teach in my normal class, I always teach this in my normal losses chapter. In my losses chapter, I often discuss this issue. I often discuss this issue in my normal class. Listen, and I'm giving you evidence. My dear students, listen to me, look at me. In this question, the taxable income was 44,500. In this question, the taxable income was 44,500. So this was the breakup. This was the breakup of tax. See, this was the breakup of tax. Just think, if your taxable income was 42,500, just think, instead of 44,500, if it would be 42,500. So for this additional 2,000, this rate will be saved. This rate will be saved. This rate will be saved. This rate. You are not getting. Wait. Previously, your income was 44,500, but I told you now your income become 42,500. So for this 2,000 income, first this upper layer, this upper layer will be cut down. Are you getting? And then you go to lower. First upper and higher rate, and then lower. This is the rule. Think over it. And if you want evidence, try to compute tax again. Try to compute tax again and then compare. So always in NICs, in normal, first upper layer, first you cut upper layer. Okay. You got it? So instead of 44,500, if Amanda's taxable income was 42,500, so on this 2,000, 40% tax will be saved. On this 2,000, 40% tax will be saved. Please think over it. This is the technical part. And yes, get ready to lose marks here. This requirement may give you tough time. The last 2 marks requirement. Now, wait. one more thing I would like to share. You know why this? Why did you multiply it with 62%? Can anybody tell me why did you multiply it with 62%? Because your ANI was 56,200. Your ANI was 56,200. That means 6,200 greater than 50,000. 6,200 greater than 50,000. That's why this percentage is 62%. That's why this percentage is 62%. Now just think. Look at here. If for instance, if instead of 56,200, if your ANI, just think, if your ANI becomes 44,200, if your ANI becomes 44,200 instead of 56,200, if your ANI becomes 4,200, then this excess will be 4,200 and only 42% you need to return. Instead of 56,200, please listen to me. This is the technical area. Instead of your instead of ANI 56,200, if your ANI becomes 54,200, that means 2,000 less. So your excess will be 4,200 and this percentage will become 42%. So effectively you will get a saving of 20%. You don't need to return child benefit of 20% now. You don't need to return child benefit of 20% now if your ANI decreased by 2,000. If your ANI decreased by 2,000. So 20% child benefit you don't need to return then. Are you getting? Please write on the chat box. My dear student, instead of 56,200 ANI, if your ANI would be 54,200, so the excess will be 4,200. And when the excess is 4,200, then 42% you need to return. So now no need to return 62%, only 42% you have to return. So straight away 20% child benefit will be saved. 20% child benefit will be saved. Okay. So now think rationally. Let me make it again the original file. Okay. Now see Amanda's husband, this guy. Amanda's husband has a taxable income of 21,000, means less than 35. Sorry, less than 37,500, less than 37,500. So Amanda's husband is a basic rate taxpayer. Amanda's husband taxable income is 21,000, so he's a basic rate taxpayer. So if you throw more income in Amanda's husband account, if you throw more income in Amanda's husband account, that income will be taxed at 20%. That income will be taxed at 20%. That income will be taxed at 20%. Okay. So now I'm going to throw the last real point. See, this is a 3-mark requirement. Everybody can't get. This is not for everybody. This is planning. This needs brain. Calculate the overall income tax savings. Calculate the overall income tax savings and reduction in child benefit. C and reduction, overall income tax saving and reduction in child benefit income tax charge for the tax year 2021. If the property income of 2,000 had been received by Amanda's husband rather than Amanda. In the real question, property income was received by Amanda. Property income was included in Amanda's income. And now they are saying, just think. If this property income was transferred to husband, then what will happen? What will be the overall tax saving? What will be the overall tax saving? Let's break it into 2 pieces. First of all, right now this income, this 2,000 property income is in the Amanda's income. Right now this 2,000 property income is included within the Amanda's income. So when Amanda will transfer 2,000 of the income to 2,000 income to husband, now Amanda don't need to pay tax. First of all, Amanda don't need to pay tax on this 2,000. And you know, Amanda is a higher rate taxpayer. So on this 2,000, simply 40%, the upper layer. 800. First saving is 800. Income tax saving for income. First of all, Amanda is a higher rate taxpayer. Amanda's taxable income is right now 44,500. So when she transfers 2,000 to husband, now her taxable income become 42,500. So this 2,000 is coming in higher rate bracket. This 2,000 was coming in higher rate bracket. So you get the tax saving of 800. Second benefit. When Amanda, use your brain, when Amanda will transfer his income to husband, so Amanda's total income will be lower. So automatically Amanda's net income will be lower by 2,000. Automatically Amanda's net income will be lower. And when Amanda's net income will be lower by 2,000, automatically the ANI of Amanda will be lower by 2,000. ANI of the Amanda will be lower by 2,000. So automatically instead of 56,200 ANI, Amanda's ANI will become 54,200. Amanda's ANI will become 54,200. So there will be a 20% saving in child benefit tax charge. There will be a 20% saving in child benefit tax charge. What was the child benefit? 2547. And now you don't need to return 20% of them. Now you don't need to return 20% of the child benefit. That is your saving. Enjoy it. So 2547 multiplied by 20% is how much? 509. These two are your pure savings. But now there is one cost as well. These two are your pure savings, but now there is one cost as well. Wait. Now when you throw this income to husband's account, so listen to me. Husband is a basic rate taxpayer. So husband has to pay 2,000 times 20%. That is 400. Husband has to pay this tax. When you throw this income in husband's account, then husband has to pay this tax. So can you tell me what is the net savings? These two are savings and this is a cost. So I think it's I know this part was technical. This part was technical. I know this part was technical. I know this. Okay, so get ready to lose these 2-3 marks. Still you will pass. You have to pass. That's it. Don't make faces I know what you do. When you solve your kit, you start crying. You discourage yourself that you know nothing. No, if you know 50% of the question, still say thanks to God. It's good. 60%, 70%, excellent. Did you ever score 100 marks in any paper? Tell me. Did you ever score? Nobody in this class ever score. Even I have never scored 100 marks. So why you guys are going for perfection? And when you go for perfection, you demotivate yourself. And in these days, demotivation is very dangerous thing. In last days, demotivation is poison. And your question is done now. Okay, right? Did you understand the question? Please give me some feedback on the chat box. Okay, now what you have to do? The third question, this is a challenger. Examiner itself says this is a challenger. Examiner calls it a challenger. The dangerous 10 marks question. Please prepare your mind now that you can't score good in this question. Prepare your mind now. Okay, in this question, everybody, all students, they do mistakes. Okay, so if you score 5 out of 10, it's good. This is comparatively always. Even there is an article for this, you know, there is an article for this. The name of this article on accglobal.com is advanced skills, because this area comes in P6 as well. Okay, so now I'm giving you 5 minutes to read this question. I'm giving you 5 minutes to read this question, and I'm taking a break, and we'll see you after the break. You can take a 5 to 7 minutes break or read this question. Okay, right? Okay, dear students, welcome back. This is our last question. So just please put effort in this question. Now, Jade is self-employed and is normally subject to income tax at higher rate of 40%. He's a higher rate taxpayer. Okay. However, because of some exceptionally large one-off contracts, Jade has forecast that her trading profit for the year ended 5th April 21 will exceed 200,000. Now, should I tell you one thing? This question is very, very helpful for real life. If somebody wants to work in tax department, for tax consultancy, this is the real question. By understanding these questions, you can work in the tax field. And nowadays, this is a very lucrative work. From your country, like from Pakistan, India, or any country, you can give services to UK clients. So this is a very good job. Okay. Now, so this time, this guy Jade is expecting, she's expecting 200,000 trading profit. 200,000 means it's greater than 150. That means she will have to pay some tax on 45%, because after 150,000, the additional 50,000. See, if your income is 200,000, so till 150,000, you have to pay a different tax, and after 150, the excess of 150, you will have to pay 45% tax. Okay, so now just make up your mind. If you reduce the upper layer in this question, the tax saving will be 45%. If you reduce your income from 200 to 160 or 200 to 170, so that means this is the upper layer, and upper layer in this question is 45%. Upper layer in this question is 45%, my dear students. Okay, now Jade is going to undertake 4 measures aimed at reducing her income tax liability and national insurance national insurance contribution, NIC, for the tax year 2021, for the tax year 2021. Okay, so these are the plans of Jade to reduce these taxes and NICs. Now, number 1, employment of daughter. Now she's going to employ her own daughter. Yes, this is allowed. Jade's daughter Emerald has recently returned to the UK after traveling overseas. She currently has no income tax, zero income tax, no income. That means complete personal allowance is empty. Complete personal allowance 12,500 she has complete personal allowance of 12,500 unused. For the 3 months period, $1 million worth, 3 months period to 5th April 21, Emerald will be employed by Jade's business at a gross monthly salary of 2,000. This salary is reasonable in relation to the duties. That means no excessive salaries. You remember the trading income chapter. If you give excessive salaries to your family members, then the excess amount is not allowed. If you give excessive salary to your family members, then excessive amount is not allowed. But this time the salary is not excessive. My dear. One more thing. The only challenging part of this paragraph is, as she's working only for 3 months, so you need to calculate NIC for 3 months. NIC. This time I'll teach you how to calculate monthly NIC. And there are 2 NICs. One is class 1 employer and one is class 1 employee. One is class 1 employer and one is class 1 employee. So as an employee, she has to pay class 1 employee NIC, and as an employer, her mom, she has to pay class 1 employer NIC for the daughter. Okay, you remember these cases? Please be active. This is the last question. Please give some energy, and this is a technical question. One more thing, for the mom, whatever, mom is the businessman, mom is the businessman. Listen, so when a businessman spends anything on employee, it's an allowed expense. So see, this salary 2,000 multiplied by 3, as she hired her daughter for 3 months, so 2,000 multiplied by 3, 6,000. This is allowed expense. This is allowed expense from mom's trading income P&L. This is allowed expense from mom's trading income P&L. And one more thing, as mom, the businesswoman is paying class 1 employer NIC, class 1 employer NIC for the daughter. So, and the daughter is the employee, so this is also allowed. So 2 allowed expenses. Within seconds I pick 2 allowed expenses for mom. Within seconds I pick 2 allowed expenses from mom, and mom needs allowed expenses. My beautiful students, mom needs allowed expenses because mom's trading profit is expected to be 200,000. Mom is expecting trading profit to be 200,000. So because of allowed expenses, trading profit will go down. Because of allowed expenses, trading profit will go down. And when trading profit will go down, there will be tax savings. Okay. So from mom point of view, I have told you. Now you tell me, intelligent students, from daughter point of view, how much is the non-saving income? She just did job for 3 months. This girl did job for 3 months and 1 month salary is 2,000. Yes, very good. She just did job for 3 months and 1 month salary is 2,000. So 2,000 multiplied by 3 is 6,000. So this girl's income is just 6,000, but she has a personal allowance of how much? 12,500. This girl's income is just 6,000, but she has a personal allowance of 12,500. So no need to pay any income tax. But yes, she has to pay. As she is doing job, so she has to pay. Class 1 employee NIC. She has to pay class 1 employee NIC. Okay. So if you think this is mom, employer, this is daughter, employee, employee has to pay 2 things, you know. Number 1, income tax, and number 2, class 1 employee NIC, class 1 employee NIC. Luckily, daughter needs not to pay income tax because the income is less than 12,500. Her income is only 6,000, so no need to pay tax. But yes, she has to pay class 1 employee NIC. She has to pay class 1 employee NIC. She has to pay class 1 employee NIC. Okay. Now, the remaining 3 points, leave it. These 3 points are also relevant. Just first do one thing. Briefly explain the difference between tax evasion and tax avoidance. Free. Whenever I teach tax, I always teach this in first class. Number 1. Number two, wait. Even, you know, I sometimes make short videos as well, vlogging. I made a video for this 2 or 3 years back for tax evasion and tax avoidance. A 5 to 6 minutes video is there. Okay. Now, what is tax evasion and tax avoidance? Both are tax saving techniques. Both are tax saving techniques. See the solution. Simple. 2 marks, 3 marks. Both are tax saving techniques, but tax evasion is illegal way of tax saving. Tax evasion is illegal way of tax saving. And if the government, if the HMRC catches you, then you will be punished. You will be punished for tax evasion. Remember. So what are the example? For example, your real income is £1 million, but you are hiding your income. You are hiding your income and you are showing just 600,000. So this is all tax avoidance. This is all tax evasion, which is illegal. Now, what is tax avoidance? It's a lawful and legal way of tax saving. It's a lawful and legal way of tax saving. What's the example? You remember NISA, new individual saving account. So if you are putting your money, if you are parking your money in NISA instead of any commercial bank, so definitely you will have tax savings, and these sort of tax savings are totally legal. So it's good. So these two lines will give you 2 marks. These 2 lines will give you 2 marks. Yes, NISA exempt for tax. New individual savings account. Okay. So I'm guaranteed that all of you must know about these two, tax evasion and tax avoidance. These 2 marks, again, free marks. Now, what they are saying, again, 2 marks. Calculate the income tax payable in class 1 NIC suffered by Emerald. Emerald means the daughter. See, this is the daughter. Emerald. For daughter, we have to calculate. Income tax and class 1 employee NIC. For daughter, we have to calculate income tax and class 1 employee NIC. Please don't sleep. I'll teach you. Don't worry. First of all, no income tax because 6,000 is less than 6,000 is less than personal allowance. 6,000 is less than personal allowance. 6,000 is less than personal allowance. No income tax because 6,000 is less than personal allowance, right? Okay. Now, next thing. Wait. Class 1 employee NIC is calculated on cash earnings. First of all, class 1 employee NIC is calculated on cash earnings, salary, bonus, and amount received for driving car. Remember, over 45 pence. So there is no case of driving and there is no bonus. Forget it. No bonus, no driving. But yes, you have salary. But there is a monthly salary. So what is it's all basic maths. I'm shifting everything to monthly. Wait, let me give heading class 1 employee NIC. Wait, your monthly salary is equal to 2,000. Okay, your monthly salary is equal to 2,000. Now, when your salary is monthly, so shift the rates to monthly. These are class 1 employee NIC rates. Respected students, you know this. Class 1 employee NIC rates, these are yearly rates. 1 to 9,500, 9,500 to 50,000. So let's apportion the limits divided by 12. Okay. So 9,500 divided by 12 will give you 791.6. And 50,000 divided by 12 will give you 41666.7. 4166.7. So these are the monthly limits. Use your basic maths mind. Okay. So here is the monthly salary and here are the monthly limits. Let's calculate NIC for 1 month. First of all, calculate NIC for 1 month. And then multiply it by 3. Calculate NIC for 1 month and then multiply by 3. You will get 3 month NIC. Okay, let me do it. 2000, 2000. See, this first band is exempt. First band is exempt. Minus 791.6 means 792. 79.1.6 is 792. And obviously the remaining amount will go in the second band. Remaining amount will go in the second band, and it's not greater than 4166. It's not greater than 4166C. So the remaining amount will be taxed at 12%. Tell me, how much is this? Tell me, how much is this? If you do it, multiply, how much is this? First tell me 1 month. 1 month. I want 1 month answer. 2000 minus 792 multiplied by 12%. What is the answer per month? I want per month answer. 145. Okay. 145. This is for 1 month. Multiplied by 3 is 435 pounds. 435 pounds. This is your NIC. 435 pounds. This is your NIC. 435 pounds. This is your NIC. Now giving you a one more shortcut. Those who don't like this method, look at me very carefully now. Those who don't like this method, there is one more technique. This is monthly salary. How much is the monthly salary? 2000. Convert this monthly salary to annual salary. Convert this monthly salary to annual salary to 2000 multiplied by 12 is 24,000. 2000 multiplied by 12 is 24,000, and then use these rates. To calculate annual NIC. Then use these annual rates to calculate annual NIC. And once you calculate annual NIC, then multiply it by 3 upon 12. Multiplied by 3 upon 12, you will get 3 months NIC. This is one more technique. It's your wish. If your wish, you want to do monthly and then multiply by 3, or you want to do yearly, and then multiply by 3 upon 12. It's all maths. Please hit the chat box. Did you understand? Tell me. Okay, now the last requirement, little heavy, but you will learn good things. Okay. So employment daughter. Now just think about the mom, forget about the daughter. For mom, this girl is employee. And we know mom is a businessman. So when a businessman spends on employee, anything on employee, it's all allowed expense. So for mom, 2000 multiplied by 3, 6,000 salaries allowed. 2000 multiplied by 3, 6,000 salaries allowed, plus. As the mom is the employer, the girl is the employee, mom is the employer. So employer has to pay class 1 employer NIC. And yes, that class 1 employer NIC is also allowed expense for mom. Yes, but don't forget, we have to calculate class 1 employer NIC for 3 months only. Class 1 employer NIC for 3 months only. Don't sleep. Only little efforts needed now. Now, next thing. Capital expenditure. Oh, this is piece of cake. This is called cake. Come on, eat it. Jade was planning to purchase new office equipment for 14,000 on 10th April 21. See the mind. 10th April 21 means next fiscal year. 10th April 21 means next fiscal year. So what? See her mind. But this expenditure was instead be brought forward to 1st April 21. 1st April 21 means before 5th April 21. So now it's inside our fiscal year. Now it's inside our fiscal year. And when this is inside our fiscal year, so do you guys know the meaning of AIA? How much is the AIA? Tell me. How much is the AIA nowadays? AIA. How much AIA we have nowadays? 1 million. Yes. So you have 1 million AIA, and this is just a bubble. 14,000 is nothing. So complete 14,000 will become 100% allowed expense in seconds. 14,000 is less than 1 million. So it will go in allowance column, and yes, capital allowance is allowed. So you will have 14,000 capital allowance. And yes, capital allowance is allowed expense. It's pure allowed expense. Is proper allowed expense? Yes or no? Okay. So you will get relief on it. For all allowed expense, we get relief. Okay. Now bonus. Listen to me. Whenever as an employer, if I give bonus, so for employee, it's an income, it's an employment income, but for boss, this is an allowed expense. For boss, this is an allowed expense bonus. Now listen, Jade has one key employee and was largely responsible for obtaining the large contracts. This employee, who has gross annual salary of 65, will be paid a bonus of how much? 10,000. Will be paid a bonus of 10,000. Now wait. This is something technical. This needs quick mind. Listen. This bonus is proper allowed expense. This bonus is allowed. We are talking about employer, businessman. This bonus is complete allowed expense for this lady. But when she gives bonus, so you need to calculate class 1 employer NIC on bonus, because class 1 employer NIC is called calculated on salary, bonus, and the driving allowance. Remember driving. So you need to calculate some extra. You need to calculate some extra class 1 employer NIC. You need to calculate some extra class 1 employer NIC. Sharp student, listen. This employee already has a salary of how much? 65,000. 65,000. So now we are throwing additional 10,000 in his account. Additional 10,000 bonus in his account. So this additional 10,000 will go in the upper layer. In the upper layer of class 1 employer NIC. Sorry, you can't understand. Let me tell you something good. Wait. See this. Can you see the class 1 employer NIC rate? Don't look at the monthly rates. Leave the monthly rates. Leave the monthly rates. It's not for you. Leave it. Class 1 employer NIC yearly rates at 1,28788 nil, and then 13.8%. Then 13.8%. So my dear student, this employee already has a salary of 65,000. That means this employee is lying in this bracket. This employee is already lying in this bracket. So if you throw more income, of 10,000, this will be taxable at this. This additional 10,000 will be taxed at 13.8%. So if you want to calculate additional class 1 employer NIC, additional class 1 employer NIC because of this bonus, so that will be 10,000 multiplied by 13.8%. That will be 10,000 multiplied by 13.8%. Think slowly, slow. Because we are just accounting for these additional events, these additional planning and events, not existing salaries. Let me write. So you will have, you will have a bonus. This bonus 10,000 is allowed, and there will be additional class 1 employer NIC, which is 10,000 times 13. That will be 1380. 10,000 times 13.8%. This is 1380, 1380, 1380, right? 1380. So these two are allowed expense. Bonus is allowed, and class 1 employer NIC is also allowed. Bonus is allowed plus class 1 employer NIC is also allowed. Okay, right? So now we discussed 3 points. Employment to daughter, you have hired daughter. For daughter, salary is also allowed and class 1 employer NIC is allowed. For capital allowance, complete 14,000 capital allowance is allowed as AIA. For bonus, for this bonus, yes, this bonus is also allowed expense. And because of this bonus, there will be some additional class 1 employer NIC, which I just calculated 1380. This is also allowed for the businessman. Okay. Now the last and easy 1 mark. This is piece of cake. If you can't do this, please resign. Please leave this paper. Please leave this paper now, because I taught you guys trading income. Read it. Read the word. What is the word? Drawings. So if the owner does drawing, is it allowed? Is drawings by owner allowed expense? No. Drawings means owner's personal expenses, and owner's personal expenses are not allowed at all. Jade was planning to take 100,000 out of the business drawings, but will instead take reduced drawings of 80,000. No issue. You take more drawings or less drawings. This is never allowed expense. Drawing is never an allowed expense. So this line is irrelevant. No need, no tax savings on it. No tax savings because of this line. No tax savings because of this line. Okay. See, there are some easy marks as well. There are some easy marks as well with difficult marks. Okay. So now what we have to do? We have to calculate all allowed expenses because we will get tax savings because of allowed expense. We will get tax savings because of allowed expense. Okay. Now the final shot, but before the final shot, this thing. Tell me, see this. Jade had forecast trading profit that exceed 200,000. See. This is her trading profit. This is her trading profit, which is around 200,000. You know, listen, I taught you guys, majority of you guys, I taught you NICs as well. On trading profit, first of all, you have to pay income tax. Yes. Trading profit is a non-saving income. Trading profit is a non-saving income. So you need to pay income tax on it. Yes. And on trading profit, you have to pay class 4 NIC as well. On trading profit, you have to pay class 4 NIC as well. These are small things. So when you reduce your trading profit, you get 2 savings immediately. When you reduce your trading profit, you get 2 savings immediately. One is income tax, and the second thing is class 4 NIC. Whenever you reduce your trading profit, never forget you get 2 types of tax savings. You get 2 types of tax saving. One is income tax and second is class 4 NIC. Okay. So better we have to discuss this as well. Okay. Now, Jade overall tax savings. Look at here. The first thing is Emerald salary. Emerald salary is 2,000 times 3. 6,000. This is full-time allowed expense. Then, obviously, when she hired her daughter, so now daughter is employee and she is employer. So you need to calculate 3 months class 1 employer NIC. See this monthly NIC rates. See this monthly NIC rates. See this monthly NIC rates. For the yearly, see, for yearly it's 8788. So monthly 8788 divided by 12. 8788 divided by 12 is 732. Okay. Now, what is your monthly salary? monthly salary is 2000. Okay, and this is the monthly band. So how you do it? 2000 minus 732 multiply by 13.8%. 2000 minus 32 multiply by 13.8%. This is 1 month NIC. 2000 minus 732 multiply by 13.8%, and then you do 3 months. Then you will do it 3 months. You will get 3-month class 1 employer NIC. 2000 minus 732. 2000 minus 732. 2000 minus 732 multiply by 13.8%. Now you will get, see, through this part you will get 1 month NIC, and then you'll multiply it by 3 months. So you will get 3 months NIC, which is 525, which is 525. Okay. 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 Smart boys and girls, please tell me. Please tell me. This is 525, right? Okay, now everything is easy. Capital allowance, AIA, complete 14,000 will be your allowed expense. As you bought the plant less than 1 million, complete allowed expense, less than 1 million, complete one shot allowed expense. Then you gave 10,000 bonus, which is also allowed expense. You gave 10,000 bonus to employee, which is also allowed expense. And because of that bonus, you have to pay some, additional class 1 employer NIC, which is, remember, 1380. Now, do you think drawings is allowed expense? Do you think drawings is allowed expense? No. So finally, what is the total amount? What is the total amount? Can you tell me? What is the total amount of allowed expense? $31905. 31905. Reduction in trading profits. See, now this is the final shot. May you understand this. These all are allowed expense for this trader. These all are allowed expense for this trader. And when you book these allowed expenses, your trading profit will go down by 31905. Your trading profit will go down by 31905. Yes. And tell me, what was your expected trading profit? Tell me. Your expected trading profit was 2 lakh. Your expected trading profit was 2 lakh. When your 2 lakh trading profit will go down by 31905, so still it will be greater than 150. Still it will be greater than 150. So only upper layer of 45%. You will get tax savings of 45%. You will get tax, you look at here, you will get tax saving of this layer. You will get tax saving of this layer 45%. Okay. So income tax saving will be 31905 times 45%. How much is this? 31905 times 45%. Tell me. 14357. And one last thing. Sorry, I took a lot of time. One last thing is, when your trading profit will go down, your class 4 NIC will also go down, because now you are a businessman. This lady is a businesswoman. So businessman has to pay class 4 NIC on trading profits. Businessman has to pay class 4 NIC on trading profits. And her trading profits are almost 2 lakh. Her trading profits are almost 2 lakh. Now open your eyes and see these rates. Open your eyes and see these rates. Tell me, 2 lakh means this band. 2 lakh means this band. 200,000 means this band. So for the purpose of class 4 NIC, she is lying in this 2% band. For the purpose of class 4 NIC, the amount of 2 lakh side, the 2 lakh excess side will fall in this 2% band. So if you reduce, think slowly. If you reduce your trading profit from 2 lakh to 170,000 or 2 lakh to 160,000, the saving will be how much? The saving will be how much? 2% saving. 2% saving you will get because you are in this third band. Because you are in this third band, so your saving will be, tell me, 638. So you can calculate the total savings. Total is 638 plus 14357. How much? Okay, so that's the end of this question. And now I would like to say all of you to plan your days. Plan your days. Don't waste your time. Don't waste your time. Better you do, revise through your, better you revise through your exam folder, pass cards, like these things. Okay, right? And for the last 3 to 4 days, I tried this thing in my life. Solve your kit orally. In last 2, 3, 4 days, solve your kit orally. How? See the question, close your eyes, think the solution, think the treatment, and then check the answer. Then question, think over it. Do complete kit in last 3 days. Do complete kit in last 3 days by this method. You will see a good refresher in your mind. You will see, because if you do last 3, 4 days written practice or typing practice, then it will, you can do only 4 or 5 questions in a day and you will be tired. You won't be able to produce good output. Okay, but yes, one thing is for sure, that last 40 marks you have to practice on software. Last 40 marks you have to practice on software. Okay, plus I'll send you link of more revision days. I recorded the latest past paper. It's available on YouTube as well. I'll send you. Plus I have 5 more revision days in my LMS, and also I'll send you, it's on YouTube as well. Watch it. They are very useful. Even many students got passed from those YouTube revision days. There are some students. And I often say this thing, even in past, I said this story back in 2014 or 15, when there were no online classes. Believe me, one student joined me in crash classes. On those days, we used to do physical crash classes. Now it's not the culture of the market. So one guy, it was the December attempt, I think. Yes, December attempt. And one guy came to me for the crash on 20th November or 19th November. And he attended first full class, 9 to 5 full class. And he asked me, sir, should I buy the kit? Just think, he asked this question on 19th November, should I buy the kit to give paper in December? I said, did you understand today's class? He said, yes, perfect. I understood your class. I said, okay, buy the kit. And to be very honest, in 15, 16 or 17 days, he cleared the paper. He gave the paper in December attempt and he cleared the paper. And then he put this status on the Facebook that I cleared in just 17 or 18 days. And you know, I shared his post on my wall. And then he reshared that post by this status, that happiness is when your teachers share your post. Happiness is that when your teachers share your post. And this is the real story, you know, back in 2014 or 15. So those who are focused, they clear in 15 days, 20 days. And those who are not focused, they can't clear in 1 year. That's also true. That's also true. So don't think negative and stay away from negative friends. There are friends, they say you don't know anything. Oh, you don't know this thing. Oh. Please stay away from negative people. Just get ready to lose some marks as well. Plus, these are important days. Now, these days are not days which you can waste on anybody. You can't waste these days. Just think, I'm also working today. Today is Sunday. I didn't take one Sunday off. I don't remember it's in last 15 years. And our whole team MHA. Today is Sunday. Plus it's my birthday as well. Sunday plus my birthday. Listen, Today I took F6 revision class 3 hours. Tonight I'll take 3 hours class from ACCA official platform, because SBR webinar I'm conducting for 80 countries from ACCA official platform. 2 classes of 3 hours, and I also did 2 business meetings today as well. So those who really want to do something, they work. That's very simple. That's very simple. Don't think that it's my day. Or if you want to do something, you have to work hard. That's why last year our institute scored 37 positions in 1 year. So you guys should take motivation. You guys should take motivation from your teachers, from professionals, and you can easily clear just by playing rationally. Leave the difficult marks, 2-3 marks, and get the 7 to 6 marks, the cash marks. Okay, right? So kindly work hard and be active on the WhatsApp group. I'll share more classes link, and be very professional on the WhatsApp group. If somebody needs help, try to help them professionally. Okay, take care. May God bless you. May all of you clear this paper in this attempt. Thank you.